Now we'll come to question number 12. Question number 12. An automobile unit is proposing to set up a manufacturing establishment whose project cost is rupees 320 lakh. The cost of land and building included in the project cost is rupees 40 lakh, whose breakup is as follows. Total project cost is 320. It includes cost of land and building 40. So what is the cost of remaining project? 280. And the cost of land and building is 15 lakh rupees land, 25 lakh rupees building. Area of land is 4400 square yards. And building area is 25,000 square feet. Okay. It is anticipated that in the first 4 years, profitability will be low due to time required for cultivating the market. To meet the situation, management is planning to hire factory premises of the same size at rupees 0.80 per square foot per month for first 4 years instead of own the building. So what are the two options you have? One option is to construct the building. Second option is to lease the building. If you construct the building, your cost is 15 plus 25. You can't only construct building, you have to purchase land also. Okay. And if you lease the building, the rate is 0.80 per square foot. How many square feet is there? 25,000 per month into 12. So what is the annual lease rental? 2,40,000 is your lease rental per annum. This 12 is for converting into year. So for 4 years you can pay the lease rental instead of owning the building, because in first 4 year profit is expected to be low. Repairs, maintenance, taxes, etc. to be borne by the landlord. If you construct the building, you have to incur repairs and maintenance. If you take the building on lease, you will not have to incur repairs and maintenance. It will be borne by the landlord. In the present project, provision has been made for depreciation at 7% per annum on the original cost of building. If you construct the building, there is a depreciation also. 7% of 25 lakh. How much is that? 1.75 lakh. Will depreciation be required in case of leasing option? Depreciation is not required for lease option. Provision has also been made for repairs and maintenance, taxes on building at rupees 1.2 lakh. So repairs maintenance is 1.20 lakh, which you will not require if you take the building on lease. The annual sales and profit figure as projected in the project report are as follows. 1, 2, 3, 4. Sales, net profit, rupees in lakhs. Capacity utilization. After the 4th year, the profit is expected to be steady at rupees 40 lakh per annum. Institutional finance is available up to rupees 200 lakh in both the options. What are the options? Construct, lease. If you construct, your project cost will be 320. If you take the building on lease, your project cost will be 280, because then you don't have to invest in land and building. Borrowing is 200 in both the options. Borrowing is 200 in both the options. So here the shareholder will have to invest 120 lakh. Here the shareholders will have to invest 80 lakh. Institutional finance is available up to rupees 200 lakh under both the alternative. You are required to work out the average rate of return. What is average rate of return? This we had studied long back when we were in intermediate. Average rate of return means average profit upon investment. Is it right? That is average rate of return. You are required to work out the average rate of return for the first 4 years on shareholders' initial investment under both alternatives. So I have given you enough hint. Shareholders' initial investment will be 120 lakh if you construct the building. Shareholders' initial investment will be 80 lakh if you obtain the building on lease. And only what you need to do, you need to find out what will be the profit, average profit of 4 years only. If you construct the building, what will be the average profit of 4 years if you take the building on lease? Then take average profit divided by shareholders' investment. That will give you average rate of return. Next line, question B. Question B is different from question A. Don't mix the two. If the lease is available for 4 years only, would you recommend leasing the premises if it is anticipated that the cost of the land will increase by 40% and the cost of construction by 20% at the end of 4-year period? For this purpose, opportunity cost of finance may be taken at 10% per annum. Following are the present value factors. So what is the second question? The second question is a capital budgeting type problem. Should we construct the building now or should we construct the building after 4 years? Now or after 4 years? If you construct now, your cost will be 40 lakh. If you construct after 4 years, your cost will be, land cost will increase by 40% and building cost will increase by 20%, plus for the next 4 years you have to pay the lease rental also. But you will save the repairs and maintenance. You have to compute the total cash flow of year 0 to 4 in both the options. Is it right? 0 to 4. If I construct the building today, from 0 to 4, how much will be my cash flow? Compute the present value. If I take the building on lease, then from 0 to 4, how much will be my cash flow? Compute the present value. Wherever present value of cash outflow is lower, that option we will choose. Okay. Discounting factor is given to you. Since you are intelligent student, first answer yourself. What is the rate of return on shareholders' initial investment? The answer is in front of you. Only you have to just arrange it properly. Yes, try it. 10 seconds only. 10 seconds for each option. Okay, time over. Time over. Answer. What is the shareholders' rate of return if you construct the building? 10.6.25. You are, I think, close or right. Yes, next. See, shareholders' initial investment is 120 here. And in the problem, profit is given to you for 4 years. Take the average of those number minus 5, plus 5, 10, 20. Average 7.5 divided by 120. That's it, done. It was so simple. And in case of leasing option, your initial investment is how much? 80. But your profit will change now. I had told you the answer is on the screen. Your repairs and maintenance will not be required. Profit will increase. Depreciation will not be required. Profit will increase. But lease rental will be paid. Profit will decrease. Okay. So by how much amount the net profit will change? Saving will be repairs and maintenance of 1.20. Depreciation will not be required. So total amount which will not be debited now to P&L account is 1.20 and 1.75, 2.95. But instead of that, rent will be charged in P&L account, that is 2.4. So by what amount your profit will increase? 0.55. So your average profit was 7.5 here. It will become 8.05. 7.5 plus 0.55. Is it right? So 8.05 divided by 80. How much? 10.06%. Over. So first you write down one small working note. First write step 1, increase in profit if the building is acquired on lease. Increase in profit. Step 1, increase in profit if the building is acquired on lease. Increase in profit if the building is acquired on lease. First write down A, savings. Average rate of return is based on profit figure, not on cash flow figure. Is it right? Average rate of return is the only method in capital budgeting where profit is used instead of cash flow. So depreciation will be now relevant even though there is no taxation in the problem, because I am not calculating CFAT, I am calculating profit. So if you don't own the building, you will not charge depreciation on building. So profit will be high. By how much? 25 into 7%. Yes, 25 into 7%. 1.75. Correct. Repair, maintenance, taxes will not be required. How much? It's given 1.20. Total without calculator 2.95. Point number B, less. Additional cost. Additional cost, lease rental. Lease rental will be 25,000 into 0.8 into 12, 2.4. Now compare benefits versus cost. So your net effect in P&L account will be, under leasing option, net increase in profit. Net increase in profit is 0.55. Net increase in profit is 0.55. So you'll add 0.55 to the average profit under which option? Own option. Own the building option. Okay. Now write down calculation of average rate of return. Calculation of average rate of return for first 4 years. For first 4 years on shareholders' initial investment. Calculation of average rate of return for first 4 years on shareholders' initial investment. Agreed? Heading little lengthy, but okay. Write serial number Particulars. Option 1 write. Option 1 own the building. Option 2 write down lease the building. Own the building, lease the building. Option 1 own the building. Option 2 lease the building. Point number E, write down total investment required. Total investment required. Own the building 320. This figure is there in the problem. Lease the building 280. Below that write down in bracket 320 minus this land and building cost, which is not required. 320 minus 40, 280. When you hire the building for first 4 years, you will not have to make investment here. So your total investment in the project will be only 280. Point number B, borrowing from financial institutions. Borrowing from financial institutions, 2 crore rupees in each case, means 200 lakh rupees in lakhs, right? Rupees in lakhs. So point number C would be shareholders' initial investment. Shareholders' initial investment. A minus B. If you own the building, shareholder will have to invest 120 lakh. If you lease the building, shareholder will have to invest initially only 80 lakh. Point number D. Average return. Under average return, next 4 lines write down year 1, 2, 3, 4. Year 1, 2, 3, 4 total average. 6 lines. Year 1, year 2, year 3, year 4 total average. So presentation is an art, okay? That makes a 5-star hotel different from Thela Wala. Now next line, minus 5. Both still same thing. Minus 5, 5, 10, 20, total 30, average 7.5. So even a layman can understand what you are trying to answer. 7.5. Now right here. Now what will happen? My profit will increase by 0.55 every year. So minus 5 plus 0.55 under this option will become minus 4.45. Sir, where is 0.55? You have only written step 1. Yes or no? Increase in profit likha hai na? That is the increase in profit. Then second year it was 5 under this option plus 0.55. So it will become 5.55. Then on your own add 10 plus 0.55, 10.55, 20.55. Total, just check the total. How much is that? Is it 32.2? 32.2. Some of you are not willing to move only. How can I teach? No reaction only. What is average? You wasted your time. 7.5 plus 0.55 you could have done. Is it right? That is also okay. Now I have kept one line blank for you. Average rate of return 7.5 D divided by C into 100. D by C into 100. 6.25%. 8.05 divided by 80 into 100. 10.06. Is it 10.06? So that was your first answer. Who got both right? Both, not now. 2 minutes before. 1. No, I want both. So now what you do, one more chance I'll give you to prove your intelligence to the rest of the world. Question number B. What is question number B? Now or after 4 years. So you have two option. Option one is to construct the building now, and option two, construct the building after 4 years. So you have to answer in next 30 seconds. 30 nahi, 45. Which option is better? At least try. Give some stress on your mind. Otherwise, how will you learn? Okay, time over. Anybody wants to answer? Time over. Yes, this side. You. No. Try. Okay, can we check the answer now? Yes. Construct now or construct after 4 years? So write option 1, construct the building now. What you need to do, I have told you, just take cash flow from 0 to 4. Whatever cash flow will incur from 0 to 4, calculate the present value. If I construct the building now, what will happen? Write down next line, calculation of present value. You are going to become a manager, you have to learn to take decisions. Otherwise, you are an ordinary accountant. Calculation of present value of cash flows. Year, particulars, cash flows, discounting factor at 10%. Yes or no? And discounted cash flow. In the year 0, you have to purchase land. At what cost? 15 lakh. In year 0, you have to buy, construct building. At what cost? 25. If you construct the building now, these are the cost, and you will be the owner. So you have to pay for 4 years repairs and maintenance. So if you own the building for first 4 years, 0 to 4, these are your cash flows. How much is repairs and maintenance? 1.2. What about depreciation? I will not write. Why? There is no taxation. There is no taxation, and depreciation is a non-cash item. Is it right? So depreciation will not write, tax shield on depreciation will not write. If tax rate was given, then yes, repairs and maintenance net of tax and tax shield on depreciation. If tax rate is given, discounting factor for 1-4, 3.169, multiply, and this is how much? 3.80, 8028. Are you going to moon, or are you solving a capital budgeting problem? Anyway, that is easier nowadays. 3.8028. Is it right? Yes, madam. Total. Why I need to give invitation every time? All are outflows only. All are outflows only. 43.80 और लिख दो 5 digit. Write 7-8 more digit. That was first option. Option 2, construct the building after 4 years. Year, particulars, cash flow, discounting factor at 10%, present value. Year, now 0, don't write. No outflow in year 0. But for first 4 years, you have to pay lease rental. You have to pay lease rental, which we have already calculated. 2.4 is 2.4, right? Factor also we have computed. 3.169 multiply 7.61. Okay, this is enough. 7.61. Then you have to buy land after 4 years. By that time, the cost of the land will become 15 plus 40%. Is it 21? Fourth year factor is how much? Is it 0.6830? Multiply 14.34. Very good. Amazing. And then you have to construct building. What will happen to the construction cost of building? It will increase by 20%. So now you have to incur 30 multiply by 0.6830. Is it 20.49? Take total. So what is the PV of cash outflow under this option? 42.44. Oh, very close. The answer is obvious. What is the answer? Construct the building after 4 years. So write down the decision. The company should construct the building after 4 years. The company should construct the building after 4 years as the present value of cash outflow is lower. As the present value of cash outflow is lower. Any query on this? You can present the answer in any format. Your final answer will be, the difference between these two answers is how much? Just tell me. 43.8 minus 42.44, 1.36. So if you present in some other form also, the difference between the two answers will always remain 1.36 only. Is it right? Now this answer is over. Write one note. Depreciation is a non-cash expenditure. Depreciation is a non-cash expenditure. Hence ignored. Now one more note write down in your notebook. In your notebook, Bauer-Heringer-Williamson method of lease evaluation. BHW, not BMW. But if you pass the exam, then you will get BMW. From Years Foundation on Leasing, yes, you're right. You have already learned how to take decision between lease and purchase option. There is another theory given by Bauer, Heringer and Williamson, how to take decisions when you have to make a choice between lease and loan. Okay. So first you write down and then I will explain. Both things can't happen simultaneously. So what do you want? Write first or listen to me first? Write. Listen or not is a secondary option. Notebook should be complete. So first write down. It is an advanced model on lease evaluation. It is an advanced model on lease evaluation from lessee's point of view. It is an advanced model on lease evaluation from lessee's point of view. This model segregates the financial and tax aspects of lease financing. This model segregates the financial and tax aspects of lease financing. This model segregates the financial and tax aspects of lease financing. It comprises of 3 steps. I'm not explaining right now. We'll explain together. It comprises of 3 steps. Financial advantage of leasing. Financial advantage of leasing. Next line formula. Present value of loan payment minus present value of lease rental minus present value of lease rental discounted at pre-tax cost of debt. Discounted at pre-tax cost of debt. Underline, discounted at pre-tax cost of debt. Up to this you have written. So what is this Bauer-Heringer-Williamson method? Under this method, we will divide our calculations into two parts. One is financial benefit of leasing. Second is tax benefit of leasing. In the previous about 16 questions, what you have done, 14 or 16 questions, you have mixed the two. They are saying no, keep the two separate. Financial aspect of leasing, financial advantage of leasing is that calculate present value under loan option. Let us say, for example, now you will not write, the total present value of installment is 10 lakh. So this is your outflow under loan option. Calculate present value of lease rental. Let us say it is 9 lakh. So what is the benefit of leasing here? Both places we are paying installment. Here we are paying loan installment. Here we are paying lease installment. The present value of loan installment is 10 lakh. The present value of lease installment is 9 lakh. And what is the discount rate we should use here? The discount rate we should use here is pre-tax cost of debt. Why? Because these are cash flow before taxation. Installment does not involve tax shield. Okay, and this we are taking gross value of lease rental. Tax shield on lease rental, tax shield on interest, we will compute separately. That is called tax expense. Right now we are only looking at the cash flows relating to loan and lease without considering taxation in this working. So if I am not considering taxation in this working, my cash flows are pre-tax, gross cash flow. So therefore they will be discounted at pre-tax cost of debt. This is called financial advantage of leasing. Some of you can ask, it can be negative also. Yes, it can be negative. This may be 9 lakh. This may be 10 lakh. So we will write financial advantage of leasing in this case minus 1 lakh. Is it right? So number can be positive, number can be negative also. Then next is operating advantage of leasing. Next is what? Right? Operating advantage of leasing. Again write first. Now here we will consider tax benefit under lease option and tax benefit under loan option. That is, what is your additional tax benefit if you go for leasing option. If you go for lease option, you will get tax shield on lease rental. So present value of tax shield on lease rental. If you go for loan option, you will get two types of tax shield. Which two types of tax shield under loan option? One is the tax shield on interest and second is tax shield on depreciation. So the difference between tax shield on lease rental minus tax shield on interest minus tax shield on depreciation. This is your additional advantage of leasing, which again can be positive or negative depending upon which tax shield is more. And there is one more thing you will deduct, present value of salvage value foregone. So now I will explain. If you have written, if I take the asset on lease, I get tax shield on lease rental. I am writing the same thing. Don't write everything again and again. If I go for option 1 lease, I will get tax shield on lease rental. If I go for loan option, I have 3 advantage of loan option. Which are the 3 advantage? I get tax shield on interest. This I have written. Then I get tax shield on depreciation. And then sometimes I also get the salvage value. So if you go for lease option, this is what you'll get. If you go for loan option, this is what you'll get. The difference between the two is the operating advantage of leasing. That is what is written here. This is what you'll get under lease option. But if you go for lease option, these are the three things that you are going to lose. Okay. In short, you are just comparing what benefit you'll get under lease option, additional benefit, and what benefit you'll get under loan option. The difference between the two is called operating advantage of leasing. Is it right? It can also be positive. It can also be negative. So it can be, say, for example, 1 lakh tax shield here, all three put together here may be 3 lakh. So it may be minus 2 lakh. Vice versa. This may be 3 lakh and all this put together may be 2 lakh. So it is a positive figure of 1 lakh. So what are the possibilities? The possibility is that financial advantage of leasing may be positive, operating advantage may be positive, add. Both are negative, add. One may be positive, one may be negative. Take the difference. Is it right? And I forgot to give you one note. Write this also. Everything will be discounted using cost of capital. Now, first write this. Now here I am going to use a different discount rate. For operating advantage of leasing, I am considering tax benefit. So it will be discounted using cost of capital. Now underline cost of capital. If given, or any other applicable rate of evaluation. Or any other applicable rate of evaluation. Or any other applicable rate of evaluation, in bracket write down, for example, after tax cost of debt. For example, after tax cost of debt. Operating advantage of leasing will be calculated using cost of capital as a discount rate, if given, first priority. If not given, then after tax cost of debt or any other applicable rate we will take. So normally in the exam, one of the two will be given to you. Either the cost of capital will be given to you. If not given, this you can always calculate. Why? Because interest rate will be given in the problem. So you can use after tax cost of debt. And then my last step is 3, net advantage of leasing. Net advantage of leasing is sum of the two, FAL plus OAL. And I have told you both can be positive, both can be negative. One may be positive, one may be negative. So what will be the final outcome, that you will get to know only after solving the problem. So the rule of the game is now decision. If the sum is positive, if the sum is positive means the total benefit under leasing option is more than total benefit under loan option. Benefit under leasing option is more than the benefit under loan option. Lease is preferred. If the sum is negative, purchase is preferred. Purchase means loan. Purchase or loan is preferred. Which means the benefit under leasing is less than the benefit under loan option. If the net effect is negative, loan is better. If the net effect is positive, lease is better. So here we are doing the same thing what we have done earlier, but we are using two different discount rates. Have you noted carefully? For installment of loan and installment of lease, we'll use pre-tax cost of debt because those are pre-tax cash flow. And for tax shield salvage value, we'll use post-tax cost of debt, yani cost of capital or after tax cost of debt. Is it right? So why don't you solve one problem? Question number 13. Engineers Limited is in the business of manufacturing nut bolts. Some more product lines are planned to be added to the existing system. The machinery required may be bought or may be taken on lease. The cost of the machine is 20 lakh. Of having a useful life of 5 years with the salvage value of rupees 4 lakh. Consider short-term capital gain or loss for the income tax. Underline. So in case any gain is there, pay tax. Loss is there, tax shield. The full purchase value of machine can be financed by bank loan. What is the bank loan? Same 20 lakh. At a rate of 20% interest, repayable in 5 equal installment falling due at the end of the year. Alternatively, the machine can be procured on a 5-year lease. Year-end lease rental being rupees 6 lakh per annum. Okay? Year-end lease rental. Good. The company follows WDV, oh so sad, of depreciation at the rate of 25%. Tax rate is 35%, cost of capital is 14%. Advise the company which option it should choose, borrow or lease. Assess the proposal from lessor's point of view, examining whether leasing the machine is financially viable at 14% cost of capital. Add one more question number C. These two you will solve like what we have done earlier. Okay. Then what is question number C? Evaluate the proposal using Bauer, Heringer, Williamson method. That question we will add from our side. Evaluate the proposal using what is that name? BHW. Bauer, Heringer, Williamson method. First I will answer third part, C. Okay. So first you write down step 1. 3 steps are involved. Financial advantage of leasing, operating advantage of leasing, and net advantage of leasing. Financial advantage of leasing means difference between present value of cash flow under loan option minus present value of lease rental. So write down serial number, particulars, rupees. How much loan you have taken? 20 lakh. Present value of loan installment will be 20 lakh only. True or false? If you suppose take 20 lakh, divide by discounting factor, you will get an installment. That installment again multiplied by the same annuity factor will again give you the loan amount only. You want to try or you'll trust me? Trust me. From 20 lakh you will calculate the installment, and from installment you will again calculate the loan amount, because I am going to use the same discounting factor in both cases. So don't waste time. Sometimes common sense is more important. Then write down present value of lease rental. How much lease rental you are paying? 6 lakh. What is the interest rate on the loan? 20%. So the gross amount of lease rental will also be discounted using pre-tax cost of borrowing. 20%, 5 year. Check answer approximately. Are you close to 17.94 lakh? So is there any advantage or disadvantage of leasing here? Advantage. Under loan option you are paying installment whose present value is 20 lakh. Under lease you are paying installment whose present value is 1794. So there is a financial advantage of leasing positive figure 2.05 or 06 lakh. If you want to write in lakhs, then you can write continuously till the end of the answer. 2.06 lakh positive. Now how will you compute operating advantage of leasing? For that I require tax shield on lease rental, which is easy, 6 lakh into 35%. Yes. Then I will require tax shield on depreciation. For that I have to prepare a table first, because depreciation method is WDV. Then I will require tax shield on interest. For that I require installment number, installment amount, a table, and find out the tax shield on interest. Then I will require salvage value net of tax. So first I have to prepare 4 working notes to compute operating advantage of leasing. Is it right? So now write down step number 2. Interest tax shield. For that you need to first find out the loan installment. Loan installment is equal to 20 lakh divided by 2.991. 20 lakh is it approximately 668 something? You write yourself whatever number you are getting. Otherwise trust me. What you want? Trust, okay. So that next table you can copy easily. Okay. If you write a different number, then your answer will change. Now we'll draw the next format of computing tax shield on interest. You have already used this format in many problems. Year, loan outstanding, interest at the rate of 20%, loan installment, tax shield on interest at the rate of 35%. So I will start the problem for you. Then you will complete the table as per your own speed, maybe in 1 or 2 days. First you start with 20 lakh. Four lakh is the interest. Installment, you write the same figure which you have written here. If you have written a different number, write a different number. Then tax shield at the rate of 35%. Keep checking the answer. Is it right? 121, 193? Plus minus 2-3 rupees okay, 5 rupees okay. Because if you make mistake in one of the numbers, subsequent answers will change. Third year answer check. 98624. Fourth year answer 71542. Last year 38819. Is right, 38819. Okay. So this I will require in the operating advantage of leasing. This last column we will require. Now next step 3, write down depreciation tax shield. Be little active. Don't sleep. Sleep at night. Don't sleep in the daytime. You do reverse thing. रात भर बैठ के व्हाट्सअप करते रहते हैं, दिन में सोते हैं. Yes or no? No. दोनों टाइम सोते हैं. Opening WDV, depreciation at the rate of 25%, tax shield at the rate of 35%. First, I will start the problem, then you complete. Start with 20 lakh, take 25% and take 35% of 25% depreciation, 1,75,000. Next year opening balance 15 lakh. 3,75,000. 131,250. Continue. 11,25,000. 281,250. 98438. 98438. 843,750. 2,10,938. 73828. Last year. What is the answer in the last year depreciation tax shield? Is it 55371? Yes. Show me. Notebook. Okay. Now, one more working note. Salvage value. The problem says if there is any gain or loss, compute short-term capital gain also. Is it written there? So can I disrespect the institute? No. So one more working note. First we'll complete all working note, then we'll summarize it. So since you are intelligent student, you have to answer what is the net salvage value you will receive. You have 15 seconds to answer. Start. What is the net salvage value? Two lakh 60,000. Okay. Or anybody else? Try. Don't worry. If it is wrong, I won't complain to the institute. हाँ मैडम. 426 113. 426 113. Right. Salvage value 4 lakh. WDV at the end of 5th year. How much is WDV at the end of fifth year? Go to previous table. Previous table, last line. You'll find opening WDV is written 632,812 minus depreciation is written 158,203. So compare the salvage value with WDV 474,609. There is a loss. Loss on sale 74,609. 74,609. लॉस ऑल्सो हैज एन एडवांटेज. लॉस का भी आनंद है. क्या? टैक्स शील्ड. ओके, दैट डज नॉट मीन यू शुड सेल ऑन लॉस. टैक्स शील्ड एट द रेट ऑफ 35%, 26,113. So there will be two inflows. 4 lakh highlighted here because of sale. 26,113 tax shield, tax saving. So net cash flow will right now 426,113. 426,113. Is it okay? Now you are going to prepare a small table. Step number 5, operating advantage of leasing. Year, tax shield on lease rental. This working note I have not prepared. I'll write directly here 35% of 6 lakh. Okay? Or you want to make one more working note? No, I know. Interest tax shield. That figure you transfer here. Depreciation tax shield. So operating advantage of leasing is the tax shield on lease rental minus tax shield on depreciation minus tax shield on interest. That is called net tax shield. Salvage value we will adjust in the 5th year directly. I will not open a column for that. We'll adjust it, but not now. The first 4 year there is no salvage value. It's only in the last year. Right. Then after computing net tax shield, now be it alert. Which discount rate we are using here? Cost of capital of this company. What is the cost of capital of this company? First paragraph, last line. Is it 14%? For operating advantage of leasing, take cost of capital or any other applicable rate. If cost of capital is given, take cost of capital. Now the last column is present value. Column number also I'll give you. Column number 1, 2, 3, 4, 5. 5 is difference between 2, 3 and 4. Net tax shield. 6. 7 is 5 into 6. So this total will give me present value of net tax shield. Is the table ready now? So what you do, write year 1, 2, 3, 4, 5. Year 1, 2, 3, 4, 5. Tax shield on lease rental, right? First year, right? 35% of 6 lakh. How much? 2,10,000. Write down 5 times. 2,10,000. 5 times. Go to that working note 2 or 3, interest tax shield working note. Last column. From your notebook copy. Tax shield on interest. You have written yourself 1,40,000. Copy from your own notebook, that will be better. 121, 193, 98624, 71542 and 38819. Depreciation tax shield. Depreciation tax shield. Copy from previous working note, depreciation tax shield. Copy from your own notebook. It should match. It should be consistent. Check the answer. Final total should be approximately minus 17,667. Approximately. Are you in the range of 17,667 plus minus few hundred rupees? Plus minus few hundred rupees is okay. Yes. कितना है? Very good. Amazing. One more calculation write down. Less present value of salvage value foregone. This is the 5th year cash flow. If you go for leasing option, you will not get the salvage value. If you go for lease option, you will not get the salvage value. If you go for loan option, you will get the salvage value. So we are computing the advantage of leasing over loan. So there is an advantage of tax shield on lease rental, but then you would lose three things if you go with lease option: interest tax shield, depreciation tax shield, and salvage value. So write down salvage value foregone, present value. Go to previous working note 4. Is it 426113 there? But that is at the end of 5th year. That is at the end of 5th year. So it should be multiplied by 5th year factor. This 5th year factor, whatever you've written. So that is roughly equal to 221, 152. So both are negative. So add them. So this is called OAL. Operating advantage of leasing is negative. 238,819. Is it right? 238,819. Yes, no, don't know. Yes. Now you merge the two answers. What was my first answer? Do you remember? Financial advantage of leasing. 2 lakh 5,632. Okay, 1 or 2 rupees. Okay. And this is negative 2,38,819. Or according to your notebook, write down. Both figures copy from your own notebook. Step 1 and step 5. net effect is some negative figure, 33186, 187, 188 is okay, but it is negative. Very close answer. So write down decision. If they ask you in the exam specifically BHW method, this is how you are going to solve. Here we separate financial advantage of leasing and operating advantage of leasing. Financial advantage of leasing is discounted using pre-tax cost of debt, and operating advantage of leasing is discounted using cost of capital. We are using the same figures which we use for our previous method also, but two discount rates are used. So this is why this is an advanced model of lease evaluation. Since NAL is negative, the firm should borrow funds and buy the machine. This answer is not over. Just draw one line. This is third question which I had added. Now let us go to institute's question. Advise which option is better, lease or borrow. So this method we will call present value method. What you have done in the earlier 18 problem, 16 problem is called present value method. As usual, write down PV method, means ICI's method. Unless otherwise specified, the student will follow this method. And now here you first write one step 1, discount rate to be used. Discount rate to be used is equal to after tax cost of debt. Here for both the option I will use the same rate, 20 into 1 minus 0.35, which comes to 13%. Here all cash flows will be discounted using after tax cost of debt. Okay, write one note. Alternatively, one may use cost of capital, that is 14%. Alternatively, one may use cost of capital, that is 14%. If you want to use 13%, then use 13% for all answer. If you want to use 14%, then use 14%. The institute has created some confusion for the student because some exam answers are based on 13% in the similar type of problem, and some exam answers are based on cost of capital given in the problem 14%. Is it right? So we will solve by 13%, but we have made our point clear that it could be solved by using 14% as a discount rate also. So what you will do in the exam, you will solve by this method only with a note if cost of capital is given. Action. Right, next step, next heading, write down option 1. After this note on discount rate, write option 1 leasing. Option 1 leasing. Option 1 leasing. Draw the format year, cash flow, discounting factor, present value. Year, cash flow, discounting factor, present value. Year 1-5, cash flow column, lease rental net of tax 6 lakh minus 35%, 3,90,000. Is it right? 3,90,000. Discounting factor at the rate of 13%. How much is that? 3.517 approximately. Multiply 3,90,000 into this number. So are you getting approximately 1371,630? Approximately. Last digit may be different because you may be using 4 digits, 5 digits, or all 12 digits which is appearing on your calculator screen? Yes or no? Yes. What is option 2? Loan. So one good news is that now all working note we have done. For example, tax shield on interest we have computed, tax shield on depreciation we have computed, salvage value net of tax we have computed. So you just have to summarize them. First write down step 1. Calculate loan installment. Step 1. Calculate loan installment in bracket as calculated above. Step 2 write calculate tax shield on interest. I'm just giving you the step because in the exam this question was not asked under BHW method. Is it right? Original question will be answered like this only. Tax shield on interest in bracket as calculated above. Tax shield on depreciation, step 3. Tax shield on depreciation as calculated above. Then step 4, salvage value net of tax as calculated above. After you have completed this 5 basic working, then you will summarize that in the NPV table and compute the NPV. Is it right? Yes, is it right? In the exam, don't write only this much, you have to do the calculation also. Right, step 5. Calculation of PV under loan option. Particulars, year 0, year 1, 2, 3, 4, 5. Or you can rotate the table also if you want. Either way, this is same thing, we have just rotated this table. Cost of asset 20 lakh, year 0. This is another simple way of getting present value. Loan 20 lakh. Why I have written year 0? Sometimes these two figure may not be equal. In this problem it is equal, so maybe you can ignore this column. Installment of loan. Go to your loan installment calculation 5-6 pages before. How much? 668673. Then write down tax shield on interest. Go to step 2 of earlier answer. From your notebook copy. One more thing, write. Tax shield on depreciation. Again go to your previous answer. Copy. Tax shield on depreciation. Check the answer. What else you will get here? Salvage value. If you acquire the asset by borrowing and purchasing, you will get salvage value. But that will be in the last year only. That is in the last year only. And the advantage of this is that you can first find out the total cash flow of each year and use discounting factor only once for each year. Okay. The extra effort required is taking the total of cash flows. So what is the total cash flow of year 0? 0. Year 1, Year 1, 353, 673. 1 negative, 2 positive. Second year, third year, fourth year, fifth year. Keep checking. Once you are sure your answer is matching, go ahead. Then what we'll do, we'll write PV factor. If you have taken the total, write PV factor. Learn to write fast, think fast, act fast. There is no room for inefficiency. Present value, now multiply cash flow and present value factor. On your own. Keep adding them also. Use your memory plus function. Of all 5 cash 1367, you are getting first 4 digits. 1367. First 4 digits must be 1367. Last 3 digits can be anything of your choice. Okay. Now compare the two answers. Both are very close. Just see. What was lease option present value? 13 lakh 71,000. And this is 13 lakh 67,000. Still there is a saving of 4,000 rupees. So write down the decision. If this question is asked in its original form, your answer will be the company should acquire the asset by borrowing funds. Company should acquire the asset by borrowing funds because present value of cash outflow is lower. Because present value of cash outflow is lower. Company should acquire the asset by borrowing funds because present value of cash outflow is lower. Is it right? Is the answer over? No. There is one separate question. Assess the proposal from lessor's point of view. Assess the proposal from lessor's point of view, examining whether leasing the machine is financially viable at 14% cost of capital. So now same problem solved from lessor's point of view. He will have to buy the asset today for 20 lakh. and he will give it on rent, he will earn 6 lakh rupees per annum. He will get tax shield on depreciation, and he will also enjoy the salvage value. And what is his cost of capital? So 14% will be used as a discount rate. Now I don't have a choice. If you are evaluating from lessor's point of view, use the cost of capital as a discount rate. It is for him a capital budgeting decision. Is it right? It is like an investment decision. Last part of this answer, evaluation from lessor's point of view. We will assume tax rate applicable to the lessor is same. We will assume that depreciation method will also be the same. So no need to prepare working note on tax shield on depreciation. Already done? Cost of machine 20 lakh 125 1-5. Lease rental net of tax. Lease rental net of tax 6 lakh minus 35%, 3 lakh 90,000. Right? Being a lessor, the tax laws allows you tax shield on depreciation. Do we need to prepare a working note? No. As calculated earlier. Copy from the previous answer. Tax shield on depreciation. And one more benefit of being a lessor. Salvage value net of tax. Again right, as calculated earlier. 4,26,113. Positive. So these are his cash flows. He wants 14% rate of return. So the decision will be based on NPV. If NPV is positive, he should go with this proposal. Check the answer in case if you have done. Total in the last column. Take total of last column. After 1 hour you are able to complete the problem. Is the answer negative 46349? So what is the decision you will write? Leasing at this rate is not feasible. Leasing at this rate is not feasible. Decision. Or you can just write lessor should not provide the asset on lease because the present value of or NPV is negative. There is one more way you could have solved this problem. You could have computed IRR. You can compute IRR. Take this cash flow, compute IRR. If IRR is greater than 14%, accept. If IRR is less than 14%, reject. But IRR will take more time to calculate. NPV will take less time, okay? Or you can compute profitability index. If that is more than 1, accept. If that is less than 1, reject. All three methods will give you the same decision. But NPV method is faster than other two methods. Now we'll go to next question, number 6. Question number 6. AS Limited has decided to go in for a new model of Mercedes car. Party. First we'll evaluate. The cost of the vehicle is rupees 40 lakhs. My God. The company has two alternatives. Take the car on finance lease, borrow and purchase the car. Swastik Limited is willing to provide the car on finance lease to AS Limited for 5 years at an annual rental of rupees 8.75 lakhs, payable at the end of the year. Payable at the end of the year. So who is Swastik Limited here? Lessor. Lease rental is 8.75 lakh, payable at the end of the year. The vehicle is expected to have a useful life of 5 years. And it will fetch net salvage value of rupees 10 lakh. Net salvage value underline. Net means after deducting commission, tax, brokerage, everything. So no chhedkhani with this 10 lakh. Okay. Write directly in the 5th year 10 lakh rupees. Depreciation rate for tax purpose is 40% on WDV basis. The applicable tax rate is 35%. Applicable before tax borrowing rate 13.8462%. What is the net advantage of leasing for AS Limited? Just add few more words under BHW model. BMW nahi, BHW. After you will become CA, each of you will buy 2-3 BMW. Okay. But there are few words added before that, after you become CA. So write down step 1. So this is one more practice. If you have any other doubt, it will get clear now. So repetition of the same problem. First write down financial advantage of leasing. Present value of borrowing minus present value of lease rental. Here I will use interest rate as a discount rate. That is why in your question also, if you see, two discount rates are given. First discount rate they have given so that you can use it for FAL, and second discount rate they have given, you can use it for OAL. Okay. Present value of borrowing don't calculate. 40 lakh rupees will remain 40 lakh only. Because if you have to compute, then you have to first find installment using 13.8462% as a discount rate, and using the same installment multiplied by same annuity factor, you will get 40 lakh. Is it right? This you will calculate. Lease rental is given 8.75 lakh. Take the total of the factors given in the problem at 13.8462%. This is based on 13.8462%. Is it right? Are you getting the same total? If the factors are given in the problem, you preferably use the same factor. The advantage is that when the paper checker is checking the paper, he also gets the same figure. Easy for him to tick mark. Okay. Next is answer. So is it close to 9,84,925? Positive or negative? If you borrow, your outflow is 40 lakh. If you take on lease, your outflow is 30 lakh 15,000. So 9 lakh 85,000 is your benefit for under leasing option. Now what I'll do, step 2, loan installment. The problem is silent how the installment of loan will be paid. So what we have decided in such problem, year end equated installment. Year end equated installment is the assumption if loan installment is not given. So loan installment is equal to 40 lakh divided by same 3.4458. So how much is that? Is it approximately 11.61 lakh? I have rounded off. Now we are buying Mercedes car, so we have to think in lakhs rupees. Okay. क्या 100-200 रुपए देख रहे हो? मर्सिडीज कार खरीदने जा रहे हो कि सब्जी भाजी खरीदने जा रहे हो? Step 3, tax shield on interest. Tax shield on interest. You will draw only 5 columns. This column don't draw, waste of time for you. First column write year. Second column loan outstanding. Loan outstanding. Third column interest at the rate of 13.8462%. Fourth column installment payment. Fifth column tax shield on interest at the rate of 35%. Right? So I will give you starting line. Year 1, 2, 3, 4, 5. Loan. If you want to write in lakhs, you can write in lakhs. If you want to write all 7 digits, that is more welcome. Okay. So what is your interest on 40 lakh? 5 lakh 54,000. Installment is 11 lakh 61,000 something. As per your notebook. And tax shield is approximately 1.93 or something. Rounded off, you will get similar answer, 1,93,000 some 100 rupees. Is it right? It should not deviate from this. Try next 4 year yourself. This is tested answer, don't worry. It is right. Take the answer. Is it over? What is the second year answer? Around 1.645, 1.309, 0.9275, 0.497 something. If you're writing in lakhs, then check the answer. Then you should have also prepared one more working note. Taxil on depreciation. Taxil on depreciation, I will give you the start, then you will finish. Okay, done. Then prepare salvage value. No, that is not required. Salvage value is not required. That is 10 lakh net. Operating advantage of leasing you can prepare. Taxil on depreciation. 40, 16, 5.6. 24, 9.6, 3.36. Is it right? Third year is how much? 2.016. Fourth year is how much? 1.2096. Fifth year is how much? 0.72575. Now write down operating advantage of leasing. Operating advantage of leasing. Year 1, 2, 3, 4, 5. How will you calculate tax shield on lease rental? Tax shield on lease rental. Lease rental is 8.75 lakh multiplied by tax rate. How much is tax rate? 35%. So first number write down in bracket 35% of 8.75 lakh. 35% of 8.75 lakh. Tax shield on depreciation you've written. Calculate net tax shield. Calculate discounting factor at 9%, not previous rate. What is 9%? It is the post-tax cost of debt. Can you check that? 9% is the post-tax cost of debt. Calculate the NPV. Please do the calculation. These are the questions they are asking in the exam. You can see that. So in the given time you have to complete. Take the total. Is it right? What is the present value of salvage value? 6.499. So total operating advantage of leasing is 10.59. Is it 10.59? Add the two. All of you have got this answer? Everybody? Those who have done, write down next step. Net advantage of leasing. What was the first answer? Anybody remembers financial advantage of leasing? 9.84, and this is minus 10.59. According to your notebook, write down. So this net amount is minus how much? Okay. So 0.74 negative. Rupees in lakhs. Decision write down. Since NAL is negative, the firm should borrow funds and buy the car. The firm should borrow funds and buy the car. Assumption. It is assumed that loan will be paid in equated year-end installment. Loan will be paid in equated year-end installment. Loan will be paid in equated year-end installment. Now we'll come to one cell practice question. In cell practice question number 13. Question number 13. P Limited has decided to acquire a machine costing rupees 50 lakh through leasing. Quotations from two leasing companies have been obtained, which are summarized below. Quote A, quote B. Second column, right? Quote B. Lease term 3 year, 4 years. They are not comparable. Equated annual cash flow you have to find out. Initial lease rental is 5 and 1 means year 0. And after that you will pay annual lease rental payable in arrear 21.06, 19.66. All figures are different. P Limited evaluates investment proposals at 10% cost of capital and its effective tax rate is 30%. Terminal payment in both cases is negligible and may be ignored. Make calculation and show which quote is beneficial to P Limited. Present value factor at 10% rate for year 1-4 is given. Calculations may be rounded off to 2 decimals in lakhs. और कुछ नहीं. So how to make the two options comparable? EAC. So we will write step 1, calculation of EAC of quote A. This is another type of problem they have asked. Now you have to practice. You have got the trick now how to solve. Is it right? Practice makes a man, woman and a IPCC and final student perfect. Year, particulars, cash flow, discounting factor they have given. How much is that? 10%? DCF, present value or DCF. Discounted cash flow, rupees in lakhs. And you have to write in 2 digits, otherwise they will not give you mark. Okay. In year 0 you have to pay that initial lease rental printed in the book? How much is the initial lease rental? 5. And tax shield on initial lease rental, we will assume next year, at the end of the year, tax shield on initial lease rental 30% into 1. This you write in bracket. 30% into 5. 30% of 5. Is the tax rate 30%? 1.5 positive. This is tax shield. 1-3 lease rental net of tax 21.06 into 1 minus 0.30. So how much is that? 14 point? Negative. This problem is silent about depreciation. Ignore. So we will ignore depreciation and tax shield on depreciation. Is it right? So first you write down discounting factor 1. In the problem they've given the factor, take there 0.91. Then add this 1, 2, 3 factor 0.91, 0.83, 0.75. 2.49. Present value 1.5 into 0.91, 1.37. And this is how much? 36 point in bracket. So this is your present value of future cash flows. But this time the two options are not comparable. So I have to also compute EAC. What is this total now? 40.33. Now write on PV NVT factor 2.49. EAC present value upon present value NVT factor. This divide by 2.49. 16.20. 16.20 means it is equivalent to spending 16,20,000 every year. So my annual cash outflow in quote A is 16.20. 16.20 is not a present value, it is annuity per year. That means you have converted all these numbers into one equivalent single outflow per annum figure. Is it right? Same format, write down calculation of EAC of quote B. So calculation of EAC of quote B. This is another type of question where you have to compare two lessors and decide which lessor is better. So it's like solving again simple problem. You have to compare the two options. Whichever results into lower cost, that we will write. If life is equal, then only compare NPVs. If life is different, then use EAC. So write down year 0, initial lease rental. This time it is 1. Year 1, tax shield on initial lease rental. How much is that? 30%. into 1.3. And how many years are here? 4. Depreciation is not required because we are lessee right now, not lessor. Okay. In case of lessee, in any case, you don't get the depreciation tax shield. So that is why they have not mentioned. How much is the lease rental net of tax? 19.66 into 1 minus 0.3, 13.762. Okay, no problem. Discounting factor 1.91. Add those 4 factors, 3.17. 3 also. Write down, no problem. 1. This is how much? 0.27. 3. Write down. And then multiply this. 43.67. So what is the present value of future cash flow? $44.3039. No problem. Point number next, write down PV annuity factor 3.17. EAC is PV upon PV annuity factor. How much? 13.9. 9. Let us compare. This is 16.2. This is 13.99. Write down decision. The company should acquire the asset on lease from second vendor. From the second vendor, because EAC is lower. Because EAC is lower. Okay. One more question. Sale practice. Question number 14. Now homework, all remaining questions are homework only. One more new thing they will ask you. Loan installment paid in advance. Loan installment paid in advance. That problem is pending. So in this question you will find the first installment of loan will be paid in advance. Messrs. Gamma and Company is planning of installing a power saving machine and are considering buying or leasing alternative. The machine is subject to SLM depreciation. Very good. Gamma can raise at 14%, payable in 5 equal installment of rupees 178,858 each at the beginning of the year. Underline, loan installments are payable at the beginning of the year. How many installments are there? 5. So in this question, from the installment amount, you have to compute the loan amount. Reverse. And the installments are at the beginning of the year. And that will also be the cost of the asset. That will also be the cost of the asset. So if you don't interpret properly and calculate the wrong cost of asset, your entire 12 marks will be wrong. In case of leasing, the company would be required to pay an annual end of year rent of 25% of the cost of the machine for 5 years. So purposefully they have not given the lease rental. First you find the cost of the machine. 25% of that is your lease rental for 5 years. And lease rental will be paid at annual end of year. End of year. Loan installment is at the beginning. So this time they have reversed the question. The company is in 40% tax bracket. Salvage value is 24,998 at the end of 5th year. Evaluate the two alternatives and advise the company by considering after tax cost of debt concept under both the alternative. What is after tax cost of debt concept? Means discount rate will be after tax cost of debt. Such a nice institute. Present value factor also they have given. And how many marks? Just 12. So write down first step 1. Calculation of loan amount. Calculation of loan amount in bracket cost of asset. Both are same. The 100% cost of asset is financed by loan only. So in one working note we are calculating two things, loan amount and cost of asset. Yes, you. What is the answer? Answer. What is the cost of the asset? 7 lakh? 66,000. Okay, let me try. So the formula will be annual installment annuity multiplied by PV annuity factor 0 to 4 years. And interest rate is how much? 14%? Why 0 to 4? Beginning. An installment is given 178,858 into add 0-4, add 1, 2, 3, 4 and plus 1. 4.2828. Let me try. First you take on your calculator 1 divided by 1.14, press equal to 4 times, press GT function, press plus 1. At 14%, what is the answer? 3.913. 30. Bus. Whatever. I think the factors given in the question is for that 8.4% post-tax cost of debt. So don't use it. So tell me the answer now. Is it approximately 7 lakh? 7 lakh approximately. The factor that they have given is probably for the post-tax cost of debt. So step number 1, cost of asset is 7 lakh. Lock किया जाए. Step 2, discount rate. Discount rate in this question they have themselves mentioned after tax cost of debt concept, which is 14 into 1 minus 0.4. So how much is that? 8.40%. Then step 3, tax shield on interest. Tax shield on interest. Same format, year. Now what is the new thing about this problem? Why I am taking it? Because loan installments are paid at the beginning. Year loan outstanding, interest at the rate of 14%, installment amount and tax shield on interest at the rate of 40%. So here write 0, 1, 2, 3, 4. How much is the loan? 7 lakh. No interest here. Be careful. You have borrowed 7 lakh today and you have paid first installment also today. This happens in C exam only. Okay. So how much is the installment in the problem? 178,858. So tax shield will be 0. Tax shield will be 0. But your opening balance of next year will be now this minus this. Anybody? 521 142. Yes, now you take 14% on that. 72,960. 178858. So what is the tax shield on that? 29,183. Anybody got the next year opening balance? 415 244 244. And what is the interest on this? 58134. On this, what is the tax shield? 23254. 23254. Next year opening balance 294520 into 14% into 40% of this 16494. And one last chance, year 4 opening balance 156,894. You will add interest, you will deduct installment. Now in this year what you do? You write interest as a balancing figure. Difference between these two. Once you pay it, the amount should become 0. How much is that? Louder. 21,963. Is it right? 21,963. On that 40%. 8735. 8785. Now write down step number 4. Present value of cash flow under loan option. Present value of cash flow under loan option. Here, particulars, cash flow, discounting factor, how much you have written? 8.4%. Working note 2. And present value. In this question, loan installments are payable at the beginning. So accordingly, you should learn to solve the problem. There is no scope of making error in the exam. Out of 12, either you will get 1 or 2 if there is a mistake anywhere. Okay. That is why the results are so low, because they deduct marks very badly. So write year 0, cost of machine, working note 1. How much was that? 7 lakh. Year 0. Borrowing. How much is borrowing? 7 lakh. 0 to 4. What is 0 to 4? Installment. How much? 178. 858. Then 1 to 5. Tax shield on. Depreciation. Tax shield on. Depreciation. Cost of the asset is 7 lakh. What is the scrap value? 24998 is given, na? Straight line method means cost minus scrap value divided by number of years and then multiplied by tax rate to get tax shield. So how much is that? Huh? 54,000. 54,000 approximately is right. And then write 1, 2, 3, 4. What is 1, 2, 3, 4? Tax shield on interest. Go to previous working note. First year. Copy 29183. Yes, tell me second year. How much? 23254. Third year. 16493. 8785. And one more thing write in year 5. Salvage value, which is 24998. There will be no taxation on salvage value because your book value will also be 24998. You are following SLM method. Am I right? You have only depreciated 7 lakh minus salvage value. So the book value and sale value are same, no taxation. Now my job is done for this part. Only I want this total of the last column. Okay. Tell me the total of this present value. Tell me. You are not willing to answer only. First, we need to get verified from more sources. 4.28. Okay, wait. 5% should give the same answer. 4.28. Is everybody getting 4.28? Check the answer again. Anybody 469? Because in the institute answer it is 469940. Are you getting 469940? So anybody got this answer? This is right. ICI is right. Okay, now the last part is just 2-3 lines now. Step 5, write down lease rental. Lease rental is 25% of cost of machine. 25% of 7 lakh is 1,75,000. Step 6, present value of cash flows under lease option. Those who made mistake can refer the institute answer, but their format is different, answer is same. Mathematics, any way you do, the answer will be same. Year, particular, cash flow, discounting factor at 8.4%, present value. Year 1-5. Year 1-5. Lease rental net of tax 1,75,000 minus 40% of 1,75,000. So how much is that? 1,05,000. And discounting factor 1-5 already calculated somewhere by you. 3.9509. Multiply 414,750. Is it right? 414,805. 844. Anyway, it's okay. Depending upon how many digits you write. So 414. And what was the earlier answer? 469. Leasing is better. Write down, companies should opt for leasing. Companies should opt for leasing because present value of cash outflow is lower. Because present value of cash outflow is lower. This answer is over.